Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The markets overnight experienced another volatile session as investors now slowly digest the disappointing quarterly results in the US, along with a hotter than expected Producer Price Index or PPI. On Thursday, the US Labor Department's PPI report echoed Wednesday's Consumer Price Index that showed hotter than expected inflation in June. According to the Labor Department, the PPI number rose by 11.3 in June, much higher than an estimate of 10.7. This gave pretty much a stronger US dollar, which measures the greenback strength against a basket of six major currencies as it refreshed its highs around 109.12, or more to the fact, 20-year highs, before dropping back to now settled in New York at 108.40. Also, Fed Speaker Christopher Waller said he supported another 75 base point interest rate hike in July, easing jitters that the market was expecting a bigger hike than 75 to 100 base points. For the Australian dollar, we can see that the market took the challenge back towards the bottom side of its range of 66.60-65, and from there rebounded and respectively holds around 67.50. In light of the pattern, I'm still not giving up the fact that we could still see further gains, and that is while the support holds at 66.60-65, then we're looking up towards the 68-69 region. In light of the technical pattern, it's still somewhat bullish in terms of recovering from the negative bias and therefore has potential to increase to a potential bull run and therefore look towards that call to the upside. The euro took a stab at the level of 99.50 overnight and posts a somewhat bullish hammer to a weaker side candle, that is. Nevertheless, the technicals are still in favour of seeing a rise. We closed above 99.50, so in terms of that, does view this level was respected, and therefore while remaining above this region, I do anticipate a move back towards 101 as a potential target. Viewing dollar yen, the market reached its upside objective of 139.15.35 as it still maintains above 139 handle. As I mentioned before, I am neutral. It was just a view for those trading where the market could actually go. I don't like trading in whipsaw and difficult markets that are extremely overbought in terms of the weeklies and in terms of the monthlies as well. So I'd rather not still sit out for the moment, remain neutral and see how it plays into today. Sterling was weaker, but it did take a stab at the level around 118 and closed above there. From that, I feel that the technicals from the RSI is showing bullish divergence. Therefore, should expect to see a rise back up towards 119 as long as we maintain above this support level. And as I mentioned, if so, then we should see a rise towards that 119.55-65 area as a key point and then reassess from there. Sterling CAD took another challenge to that bottom side of the range, roughly around the 153.75, and was rejected and went straight for the top side call of 155.5, which was also respected. From there, the market still looks, from a technical point, in a slightly positive way that we should see a retest to that top side, and a close above 155.5 would give further scope up towards 156.35.55. The market took a stab to the downside for gold and nearly reached its objective, which is at 1,686.91. The market did recover somewhat, however, still remains a little bit to the bullish side due to the RSI holding divergence to support a recovery to the bullish fact that the market, as long as it maintains above the bottom side of this range here, 1,686.91. And the reason why I like this level is that through the past we can see in the weeklies that we got a hammer and also a dragonfly doji from challenging this bottom side of the range, and therefore eventually should see a rebound back towards 1,742 to around 1,754, or even stretching to 1,764 to 66. Well, we've got a dragonfly doji, a weak one, to support a mild recovery for oil. It did stab through that key level, which was around 92 2040 and went further to the downside, as you can see here, and nearly not too far away from its 85-86 objective after inking a fresh low around 88. The markets are still going to continue to be a whipsawed roller coaster ride, and therefore at present I'm still going to sit out and view this bottom side of the range, or reevaluate and see how the technicals are looking in terms of the next 5 to 10 days, whether they're bullish or bearish. So for the moment, I'm going to remain neutral. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoyed the great start to the day.